Good afternoon. Welcome to Halftime Report. It's 12 noon. We're halfway through the trading session. I'm Reema Tendulkar. With me is Surbi Upadhyay. For the markets, we're extending that winning streak. So as we speak, up close to about 0.5% for the week. The Nifty's seen a rally of about 3.5%. Banks have been the big outperforming sector, with the Nifty Bank seeing a rally of about 5.7% for the week. The Sensex scaled that 38,000 mark for the first time ever earlier today. But as we speak, we're just off that level by a smidge. The Bank Nifty continues to scale record levels. So right now up close to about 400 points. IT is making a comeback. So take a look at TCS. That's at the high point of the day. It's rallied close to about 2%. Also keep your eye out on the global markets because the indices there are also fairly upbeat, even though Bank of Japan has offered a relatively weaker assessment of its own economy. They're saying the exports and output has been affected by the overseas slowdown. In fact, just off late, exports have showed some signs of a slowdown, but that is just fueling the other side of the argument is that the central banks are going to be very benign. And Davish? Well,
benign, I guess, is a good word because the way this rally has shaped up, Reema, it's been absolutely breathtaking. We're halfway down March and we're looking at gains of over 5.5% on the index. On the Nifty, mid-caps have roared away about 6%. If you're looking at the small-cap index, and this is just the index, mind you, not individual stocks, the small-cap index is up some 11% in the last 7 or 8 trading sessions alone. That's been the nature of this rally. Even today, it's very widespread, equal participation, large caps, mid-caps and small caps. So it's spread across the market, and that's been one of the most heartening facets of this rally. Well, we'll get you lots of big voices to talk about how fantastic this Friday is turning out to be if you are a bull. Awful piece of news, really, for the city of Mumbai, and we will get you more updates on that as we go. But to start things off, let's get back to the market, which is, again, getting closer to the highs of the day. Let's pull up the Nifty chart for you, 11,420. Now, we are practically where we were in September. Middle of September is where the market was flirting around with these levels. And right now, we've gone back to that zone. So what next? We have a seasoned market voice joining in now, Nilesh Shah, MD of Kotak Mahindra Asset Management Company with us. Nilesh, good afternoon to you. Happy Friday to you. What a turnaround this has been. Now, what is the genesis of this? Because as far as domestic liquidity is concerned, you guys are still selling in the market almost daily. We have a DII sell number. Foreign investors have decided to come in and buy. Where's this party heading? Is it going to last?
So one, it's the domestic institutional invest market. It does not necessarily mean mutual funds are selling. And it also means that possibly there is selling in the cash market, but there could be buying in the futures market. So just from one number, it won't give you a correct picture. At least as far as I can understand, mutual funds are net buyers in this rally. Our inflows have slowed, but it hasn't become negative. And maybe there are other domestic institutional investors who are creating space for divestment by selling in the market.
Okay, so you're actually saying that mutual funds continue to buy in despite the fact that the gross inflow has come down, the net inflow has come down. You're saying there is buying that's happening. Maybe there's some selling in the cash, but they might be then buying in the futures.
Absolutely. Because the net inflows are still 5,000-6,000 crore plus. And that much cash we have to deploy on a monthly basis.
And apart from the fact that institutions are also making space for the flurry of divestment, subjects which have come to the market. So there has been a lot of supply coming in, which is also getting soaked up by the institutions. Nilesh, afternoon. This is Reema here. There were 2 reasons for this rally. One, it was said to be a catch-up rally compared to the global markets, since U.S. markets had a big rally from Christmas to February and the Indian markets had underperformed there. And secondly, on account of the changing political landscape. Purely on the catch-up bit, has that catch-up bit taken place? Has the reallocation of, investor money from the other emerging markets to India already taken place, or are there more legs to that side of the rally?
If we look at the FII flows, it's coming obviously on the first reason which you mentioned is that India was underperforming in the month of Jan and part Feb, and hence some allocations have shifted to us. Second, globally, central bankers have now indicated that interest rate hike cycle is over. Liquid and the currencies have become weaker, and that allocation is shifting to emerging market. The second is obviously on the domestic side, there is hope for a stable government. The Satta Bajars are indicating towards that. And that political stability also pushes people to allocate money ahead of election rather than after election. The third thing which is happening and which is far more fundamental, that for a large part of last 3 years, we had seen tight liquidity, high real interest rates, and limited transmission of credit in order to improve our macro situation. Now, inflation has come down to below RBI's targeted level. For last 5 months, inflation has been having a handle of 2%. Now, with inflation under, we started taking steps to improve liquidity, cut interest rate, and improve transmission. And that will be supportive for higher economic growth and obviously better corporate earnings. So somewhere combination of flow, somewhere corrective action by RBI to support growth, and somewhere expectations of a political stability all have come together to create this rally.
I want to talk about one of those legs. I'll make that my last question, Nilesh. The politics of this, is this primarily fueled by expectations of the return of the present government, perhaps? In which case, is that sort of, is that also a potential risk into the future? The fact that we've run up so quickly, the rally has been so fierce in the month of March, does that also set us up for possible disappointment?
So, market always have tendency of discounting future probability. And if we see the experience of 2013-14, in September 13, markets started getting sense of a stable government, and markets kind of moved up from 18,000 level all the way up to 28,000. But people who waited for election results and then invested, then had to be satisfied with subdued results, because 28,000 Sensex has become roughly about 37,000 now. So market tends to reward risk, and you have to take the risk of election outcome in order to make higher return. So it's all question of risk and return together.
Absolutely. Nilesh, just one final question then. If someone had money today, what should their allocation be right now? A fresh investment into the market at these levels?
I mean, he should ideally consult a proper financial advisor.
Fair enough, but at least sectorally or a large cap, mid cap kind of a breakup, some direction for a lump sum investment at current levels.
If you are a high risk taker, you can still invest in small and mid cap. If you are moderate risk taker, then multi-cap will be better. And if you are below average risk taker, then something like balance advantage fund will be more appropriate. Dynamic equity allocation will be more appropriate.
There's something for everyone there, isn't it?
Absolutely. And for more, you can always watch Money, Money, Money. And Nilesh is always a great guest to have on that show as well. And Nilesh, more of those details maybe some other time. But right now, thank you so much for giving us a sense of what you think about this rally, this absolute breathtaking month of March that we have been in the midst of. Well, on that note, just a quick revert back to the screen and look at this go. I mean, 80 points higher on the Nifty. That's what you're getting. Strength to strength. There is no sign of sellers. If you thought the weekend phenomena is setting in, at least not right now, not in the first half of the day. Second half, if there are some sellers coming in to take profit, we don't know. But right now, it is rock solid. Let's take a...
HDFC Bank should come up for you on your screen, because that has been a pillar of support for our markets for the last few days. This week, HDFC Bank has moved up 5.5%, 8% for the month of March itself. And that stock has made an up move. And keep your eye out on TCS. That too is participating in the upside and saying, count me in this rally.